Dearest friends, it is time for another episode of Look at This Graph, your not so quick yet dirty explanation of what's going on with Denver real estate and real estate in America as a whole, where we've come, where we are, and where we're going. And today, I want to look at, obviously, a snapshot of where Denver is right now. We are in April as I'm recording this. This is really the meat, the high time, some would say the pinnacle of the real estate season on the year. Very, very seasonal here in Denver. And we are in the most active, let's say, part of the buying and selling season. But you may have heard lots of chatter about a potential recession. Last week and change, that has been a big topic in the news. It's been something that I've heard about at least once a day. From various sources. And so I want to look at that and see if we do have a recession of some sort coming, what we can expect that to do to Denver real estate, because the answer may surprise you. It surprised me in some ways. These are all projections. We don't know, right? Anything. No one has a crystal ball, as we're all supposed to say. But I found it very interesting to see what recessions do with real estate, because it can mean a few different things. It is a very, very unique time, which you may know in a number of ways. We had a huge run up in home prices. They have leveled off and fallen in some ways, which we will look at in graph form here. And so I want to get into it, and I want to just give you an idea of where we're at if you're thinking about buying or selling in the next year or so. I want to have some suggestions for that. And then really what a true recession, whether it's coming or not, I don't know. But what that would look like for real estate, and for real estate specifically in Denver. If you've watched these before, you know the drill. I'm Sam. I run a real estate team here in the Denver Metro. It's our goal to be your go-to real estate resource for anything you need. So please do reach out. There's ways to do that in the description. It's me and a bunch of real estate ninjas, and we take pleasure in few things more than being at your service if we can. Just even having those conversations is one of my favorite things. And so let's get into it. So I will be moving myself around here so we can get an idea of what we're looking at. Let's start, as we typically do, with stats from the lovely and powerful Megan Aller, title rep here in the Denver Metro with First American Title, and one of the most successful title reps in America. She puts out a great real estate market report weekly for real estate professionals like myself. This is the first one I like to look at. I want to go there. I'm going to go there. And then I never know. And then I'm going to move this guy here, because who cares? I'm not going to go there. This is a ton going on here. I usually say, let's focus on one thing. Let's focus on this black line. And I'm going to tell you why that matters. Blue line follows a similar trajectory. Those are two different forms of inventory, ways of measuring inventory. Let's look at the black line just for ease. This is inventory. This is how many homes are on the market in the Denver Metro. And this is basically going back way over here is 2020. This over here is present time, April of 2025. What you probably understand, and I'm sure you do if you're watching this, supply and demand. The more inventory we have, typically the more that favors buyers. The less inventory we have, typically that favors sellers. So if you look back here in 2021 and really the early parts of 2022, very, very low, extreme sellers market, nothing on the market. There was a lot of homes coming on the market. They just all got snatched up right away. Very, very low inventory levels for a long time. Then in 2022, interest rates shot up. Second half of the year, you see inventory rise. Now in 23 and 24, the last 2 years, we're seeing a more typical, again, very weird real estate rhythm right now for a number of reasons, but more typical cycle for the Denver Metro, which means very, very seasonal. This point right here, early 2023, springtime 2023, basically January through June. Same thing here in 2024. You'll notice on both fronts, second half of the year, inventory shoots up quite a bit. That is just the seasonal cycle. You'll also notice that in 2023, the trough was lower, i.e. more active than in 2024. Okay, so 2024 was a cooler market overall than 23. And then the peak, I guess this is probably an inverse of the way I should be saying it, but it's higher. Basically, the peak of inventory is higher. So that is what's in 22. Things were wonky. 23, it started to stabilize. 2024 was a similar version to 2023, albeit slower. 2025, of course, nobody knew what to expect. We expected sort of a repeat of 2024 for a number of reasons. What we're seeing is a slowdown, more so than we expected. I would say a considerable slowdown, because this is the spring market in 2024. You see inventory is higher in the prime selling season than it was in 2023. This is the spring market right here, guys. It's not going lower than this. It's really not. You see it shoot up here this last week. That could be an outlier. As I'm recording this, we're going into Easter weekend, which is going to be a much, much slower time for buyers and sellers, just because nobody's out there looking, or at least 40% fewer people are out there looking. But this right here isn't going any lower this year, aside from something crazy and extremely out of the ordinary happening. Like it happened back in 2020, but it highly unlikely, right? So this is our spring season, guys. Homes are selling, yes, especially if they're priced right, presented well, all those things in a desirable neighborhood. But the inventory overall is a lot higher here. That has to do with interest rates, squeezing buyers for affordability. I also believe it has to do with more homes, more sellers getting used to the fact that, hey, if they're going to sell, we shouldn't wait till interest rates drop. So there's a bunch of buyers out there in the feeding frenzy again. That's not going to happen the way it happened in 2020, at least not for a long time. And so sellers are getting used to this. Hey, if we're going to move, it's time to just list our home and move and get what we're going to get. It's not going to be a 10, 15% raise in prices every year. Sorry, that's not normal. That was a phenomenon. And we'll look at what prices are doing year over year, because that's interesting too. So basically, slower real estate market considerably in 25 than 24, and slower, I'd say, than most people in the industry expected. That's what's going on here with this one graph. Another way to look at this is odds of selling of all the homes that are listed in a given month. This is how many sold within the first month of being listed. You see odds of selling basically right here. Yeah, the current is 42%. 42% of homes sold within the first month. Back in crazy times, they were crazy high. But even last year, around the same time, the odds of selling were well over 50%. Significant difference. Okay, I like to show this. This is average shows per listings. Yes, shows per listing per week. Okay, right now the average is 1.8 showings, 1.8 private showings per listing. I like to show this just if you're thinking about selling your home, or if you do have a home on the market right now and you're freaking out because you only had 2-3 showings that first weekend. Guess what? You're above average. It's just much, much slower out there. And this same thing too, showings to contract. This is a thing I try to hammer time and time again. Right now our showings to contracts are 16. On average, it takes 16 showings per contract to get under contract, then to eventually sell your home. So you can do the math. If you're planning on selling, it may take a few months. And I like to point this out because if you're confident in your pricing going on the market, but you don't get an offer the first few weeks, the worst thing you can do, one of the worst things you can do, depending on your situation, is freak out and drop the price, because it may not be a price issue. There's a number of other markers we can look at to determine whether it's a price issue or not. But merely not getting the home under contract in the first week or two oftentimes is not a price issue. It just means because there's fewer buyers out there looking, we haven't had the activity, fewer buyers and more listings for them to choose from. We haven't had the time to get the requisite number of buyers through the door to get you that contract yet. So the right answer can be stay the course and don't freak out. Okay, this is one other thing I like to look at just in terms of inventory. Same thing, black bar, black line here is the inventory, average inventory on the market. You see it's really skyrocketed since the crazy times. But way over here on the left, this is 2005, 2006. Yes, this was leading into the Great Recession where it ticked up. But you see how wild it swings seasonally. So we're significantly higher than we were 4 years ago, 5 years ago. But we are not to the levels of pre-crash 2008 yet. We're still quite a bit below that. So when you are thinking, is this a buyer's market? Is this a seller's market? The metrics for how we determine that are probably getting outdated. Still, technically, it's a seller's market. It's becoming much more buyer friendly. Okay, here's one that I like to look at here. I'm going to make myself smaller because who cares about seeing me? What we want to do, this is prices. Okay, this is what I like to look at. Prices year over year. Right now, if we go down, Median sold price and average sold price. Year over year, those are down respectively 9 and 8%. Prices are down. So you see this gradual climb, then you see the huge jump from 2020 to early 2022, then a pretty sharp come down, and then sort of a leveling off. But over the last year, 18 months, prices have come down. They've come down 8 to 9%, whether you're looking at median or average just in the last year. That is significant. That's not an outlier. That's not 1, 2% either way, margin of error, that sort of thing. Prices are coming down because of these reasons we're seeing. Now, it would make sense, right, based on these other factors we saw. But I think sometimes it's still surprising because it seems like home prices haven't come down. It feels like prices are still so high, and that's one of the things that causes this big affordability issue out there. But they've come down. And will they continue to come down? Maybe. It's going to depend what happens on the broader economy. And a number of things, of course. One other thing I like to point out is seller concessions. Okay, this is something beyond a price reduction. This is sort of a hidden little metric, what's happening in the market right now. Seller concessions is something that the seller will say, hey, rather than a price reduction, it's same difference to the seller, but I'll give you cash back at closing. Of some sort to help with your closing costs. Oftentimes that's used for an interest rate buy down. Right now, across all prices in the Denver metro, 59%, nearly 60% of homes that sold had some sort of seller concession. They vary from a few $1,000s to $20,000, $30,000, $40,000. It can depend on a lot of factors. That's huge. That's something that's not baked into this graph. This is just sold prices. But this is affecting the net to the seller. This is affecting the true value that sellers are getting for their home. So based on this, prices have come down, even net prices have even come down more than it looks like because these seller concessions were not happening in this way at the peak of the market. Okay, we have one more thing to look at when we talk about recession. So we talked about everything that's going on in the world. Tariffs, God, if I have to hear that word one more time. Wild swings in the stock markets. What's going to happen? I don't know. Many people believe we're headed for a recession. We're in the beginning of a recession. I think it's fair to say that there's a good possibility of a legitimate recession in America. I'm not an economist, but based on a lot of things over the last 5 years, we're probably due one, realistically. The economy maybe even needs one. The question is, what does that mean for real estate? If we have a recession, do real estate prices drop? Short answer, not necessarily. And maybe not at all. It actually can be, based on the data, good for real estate prices if a recession happens. One of the big reasons is that's a recession, a lot of the time, is when the Fed will cut mortgage rates. Whether that'll happen or not now, I don't know. Jerome Powell gave some very interesting, some would say disheartening comments yesterday when I'm recording this. Okay, the website Keeping Current Matters let me see if I expand this. Yeah, this is good. Looked at the last 6 recessions, saw what housing prices did during those recessions. And this is what may surprise you, but you would think worse economy, fewer people buying homes, less demand, home prices might go down. Also, we have this other part of interest rates typically being cut during a recession to try to spur buyer activity in every sector, not just real estate, but it does affect real estate. So if you look back of the last 6 recessions, home prices dropped 2 out of the 6. I guess there was a recession back in 1980 and 1981, 2 different recessions. I was born in 86. I don't know. And in 1991, so 80, 81, home prices rose 6%, significant. 81, 3.5%. So if you look at those two, we're almost 10% over 2 years. That's huge. And then back in, yes, this is home price changes. And then back in 1991, it went down 1.9%, close to a negligible amount. In 2001, up 6.6%. 2008, this is the big one. This is the big outlier. Home prices, you may remember, dropped considerably. Keeping Current Matters in their graph has it at almost 20%. What you'll remember, though, is this was not a normal recession. I guess I don't know what a normal recession is, but you'll remember what happened in 2008. Did the greater economy collapse and that caused a drop in home prices? No, the mortgage industry, the housing industry, was responsible for the global financial crisis. That was the thing that tipped it all off and really the big driver for the majority of it. So, of course, it would make sense that home prices would drop a ton in 2008 because that wasn't just a result of the recession. That was the recession. That's what caused the recession. Then in 2022, another weird one, global pandemic, but prices rose 6%. And then, of course, significantly more after that. So moral of the story is more often than not, no, a recession won't cause home prices to drop. And it can actually be good for home prices. Another graph we touched on earlier too, though, what will it mean for mortgage rates across the board over the last 6 recessions that they are tracking here? Mortgage rates have fallen, and most of the time considerably. 80, 4.25%, 81, 5%. Now, you'll remember in the early 80s, prior to this drop, they were at, I believe, all-time highs around 18%. So even that big swing there is still getting them around 10, maybe a little bit less. 1991, mortgage rates dropped 2.25%. That's huge. That's an enormous drop in mortgage rates. If they dropped that much now, we'd have a feeding frenzy on our hands. 2001, they dropped marginally. And then in 08, they came down. And in 2020, again, they came down and then significantly more after that. So almost based on this data, and again, who knows what's going to happen? And again, I'm obviously not an economist. I'm just a real estate guy that looks at the market and looks at the data. But based on this, if we do have a recession, we can expect interest rates to drop. Now, Powell has said recently, well, we might have a dual mandate, meaning we need to keep inflation low because these tariffs could theoretically drive up inflation. And the reason rates have been jacked up for the last 2.5 years anyway is to try to combat inflation. So if inflation's going up, you don't want to cut interest rates. It's basically the worst thing you can do if you're only worried about inflation. But at the same time, if the country goes into a deep recession, cutting rates is what happens. That's what happens to try to get people out there and get people spending money and get us out of this recession. What does one do with that? I don't know. We will see what happens. I would expect, based on these two graphs, if you're expecting a recession to come, I would not expect a large drop in home prices to come with that. We see what they're doing. For a while, home prices were holding strong. They're coming down. These year-over-year numbers are significant, and I don't think people are paying as much attention to that as they should be. In other markets, they've dropped way more, but for a Denver market, we'll see where they end the year. We'll see. Sometimes the spring market shifts forward or back. Last year it was early, could be a little late this year based on weather, based on economics, a number of factors. I don't know. We'll see where we end the year. Right now, looking at year over year, month over month doesn't do much for me, but looking year over year, this is significant. This is something that I'm going to be tracking. If you are looking to buy right now, I think that it's tough to say it's a good time to buy because affordability is so challenging. The reality is real estate is a long-term investment. I've said this many, many times, and I'm not the only person to say it, obviously, but when you buy doesn't really matter as long as you're considering staying in it for the long term. Yes, you can try to time it. Good luck. If you can make the payments, if you can afford the payments right now and buy right now, you're benefiting from a softer market, from lower home prices, even though it doesn't seem like it. And when interest rates come down, because it will happen, and who knows when it will, it may be years, you can benefit from those lower interest rates with a refinance. If you're looking to sell, right now is the time to do it. If you're looking to sell in the next year, right now is the time to do it, like literally right now. Like we need to have a conversation and get that home listed ASAP, because I don't want to see what's going to happen after July 4th for sellers. I don't think it's going to be good. Regardless of the broader economy, the recession or anything else, just seasonality here in Denver with what we've seen this year versus last year, it's not the end of the world, but it is certainly not ideal to be listing your home the latter half of the year this year, or waiting until next spring is a good option too if it's something you're pondering down the road, but don't necessarily need to right now. That would be a good option too, probably a little bit better than listing right now. Again, who knows what's going to happen? But that'd be my recommendation. And if you are looking to list in the spring, you can start doing that prep work in the fall and winter and just be ready to go once the opening gun sounds, whenever that is in 2026. Like I said, if we can do anything for you, I'd personally love to have a conversation with you. Please do reach out. And otherwise, I love you. Good luck out there. Talk soon.